Very good evening to all my BCA final year students. Let us commence with the subject of COS, that is Computer Oriented Accounting System. Now, we are studying about journal entries. So, we are studying about particular transactions head and how and why that particular transaction head perform in the books of account or in the final accounts. So in this series of video, we have discussed various subheadings. Today, we are going to discuss two different subheadings. First one is purchase and sales account. Under this purchase and sale transactions, how the journal entries are made and why that particular journal entries are made. The reason for making such journal entries. So let's go into the video. Purchase and sale transactions. Generally, there is a purchase account separately for every organization and there is a sale account separately for every organization. For example, if you are a retail shop dealer, if you are a retailer, you bring the products from the wholesaler and you sell it in your shop. The same product you have entered into the purchase account, the same product after the sale, you will enter into the sale account. But there is a slight changes that you will enter into the sales account with the profit you have earned with the product. So purchase and sale account can be of same product also. So let's study what's written on your screen. Purchase and sale of goods. It is very common, especially in trading and manufacturing business, to purchase and sell goods. Obviously, in a manufacturing business and in trading business, it is very particular to purchase and sale of goods because the manufacturing trading business basically deal in the purchase of goods and sale of goods. Purchase of goods means manufacturers manufacture the goods and they pass it down to the wholesalers and retailers, the chain of distribution. And the trading business means they bring goods from the different shops or different outlets and they trade to the customers or to the wholesalers. So trading and manufacturing business. So studying the next line, when goods are purchased, they are taken into purchase account, and when goods are sold, they are taken into sales account. Obviously, when you purchase a particular good, you enter into the purchase account, and when you sell a particular good or you sold a particular good, you enter into the sales account. Second part, purchase and sale of investment and other assets. If there is a purchase and sale of investment and other assets into the business, what are the following steps you need to remember and what are the important things you need to remember? Let us study in this video. When investment like shares, debentures, etc. and other assets like plant, building, plant, building, furniture, etc. are bought or sold. Okay. Investment, there are shares and debentures. So you are science students, you may not be aware of shares and debentures. Shares are a ownership of the company which is sold by the company to borrow money from the public. Shares and a particular type of share or a particular type of bond is called as debentures. So there are borrowed money or borrowed form, and a part of capital which is borrowed from the market is called as share, and a part of capital which is borrowed in the form of the bond is called as debenture. So there is a two separate discussion between share and debenture. They are not the same thing, but they literally mean the same thing. Means it is carrying, it is borrowing of money from the public and putting that money into the business for either working capital, for either fixed capital. Okay. Next is other assets. Other assets means there are fixed assets. Then obviously for the purchase and sale, it can be of fixed assets. For the current assets, they may not be having a particular account of current assets, but for the fixed asset, example like plant. Plant means you are having your own plant, means your manufacturing unit. Building means your business building, and furniture. Furniture example is a current asset. Okay. Furniture means you may have some particular furniture in your business. Are brought or sold, purchase account and sales account are opened. Okay. Purchase of the assets and investment will increase the amount of the relevant item. Hence, asset and investment account is to be debited. Okay. So whenever there is a purchase of a particular investment or an asset, it will increase the amount of a relevant asset. Suppose I'm purchasing furniture. So it will increase my furniture capacity of the business. It will increase my furniture relevancy in the business. If I'm particularly buying a plant, so it will increase my asset value. So particularly, so when it will increase my asset value, the particular asset and or else if it will increase my investment value, the particular investment has to be debited. Means asset account is to be debited. Sale of asset and investment will decrease the amount of relevant item. Hence, the asset and uh, investment account is to be credited. Okay. Two important things to remember. First one is when there is a purchase of sale and investment, you have to debit the sale and investment account. When there is sale of asset and investment, you have to credit the sale and investment account. Debit if there is a increment or purchase, you have to debit. If there is a sale, so you have to credit. Purchase means debit, sale means credit, particular asset or investment account. Moving forward, cash and credit transactions. What do you mean by cash and credit transactions? There may be cash and credit transactions in the business if cash is paid or received while dealing the particular is called as cash transactions, but where the payments or receipts are postponed to the future days, it's called as credit transaction. Where there is credit transaction for respect of purchase or sale of goods, the personal account involved is always recorded. Okay. So cash and credit. Cash means when you went to a shop, you purchased and you paid cash. So that is a cash transaction. Credit transaction means there are a lot of dealers and you can say uh, dealers and varieties of wholesaler available. Those who provide credit facilities. Credit facilities means you purchased amount of 1 lakh rupees and you uh, have given the shopkeeper or the wholesaler 10,000 rupees. Rest 90,000 you promise to pay on the future dates. Means either on installment basis, either on the full payment basis. So that is called as credit basis. So when there is a net cash given to the various transaction of purchase or sale, it is called as cash transaction. When there is a promise to pay the amount on a particular future date, that is called as credit transaction, which is can be of a sale or a purchase. So when there is a credit transaction involved, particular person's personal account is involved because credit is given on the person, not on the thing. Credit is always given on the person. Suppose I took 20,000 rupees credit from my friend for my business, she may not write in her books that I have given 20,000 to Sabha's business, but she will write I have given 20,000 rupees as credit to Sabha's account, not Sabha's business. So there is a difference. Here the business will not be involved, but the particular person's personal account will be involved. Moving on. Journal entries. Purchase of goods rupees 35,000. Okay. There is a purchase of goods rupees 35,000. There are two accounts involved. First one is cash. First one is purchase and second one is cash. So cash is a real account and purchase is a personal account because a particular person goes and buys the product. There is no company, if there is a company also, people of the company go and buy the product. Company doesn't go itself. And if there is a particular business, the business person will go and buy the product. The business won't go and buy the product. So purchase is a personal account. According to the rules, the entry is purchase account debited rupees 35,000 to cash account rupees 35,000. Because goods are being purchased for cash and firstly, when goods come in, so purchase account is debited and goods are coming in, so it is debited and cash is going outside the business, so it is credited. So there are two transactions involved in this particular transaction. Two accounts are involved, that is real account and personal account. Real account is Credit what, debit what comes in, credit what goes out. Personal account is debit the receiver and credit the giver. Here the purchase account is receiving the 35,000, means the purchase account is to be debited, and credit what goes out, cash is going outside the business. So to cash account, credit that 35,000 rupees is credited. Narration is being goods purchased for cash. Next transaction is purchase goods rupees 30,000. Now, there is no mention that it is being purchased for cash or credit, so we assume it is a cash purchase only. Whenever in your question paper or in your question, it has to be mentioned that there is a purchase of goods rupees 30,000, then you have to assume that it is a cash transaction only. If it is a credit transaction, it should have been mentioned in your question paper. So, cash and purchase accounts are involved. So entry is purchase account debited rupees 30,000 to cash account rupees 30,000. Purchase is a personal account, means debit the receiver, credit the giver. And cash is a real account, means debit what comes in and credit what goes out. So the same transaction is copied from the first transaction. There is no difference in this transaction. Moving ahead. Purchase goods of rupees 50,000 from Amar. Now a particular person names is mentioned that it is purchased from Amar. So purchase account and cash account are involved or is involved. Rule is debit what comes in and credit what goes out. Personal account is debit the receiver and credit the giver. Entry is purchase account debited rupees 5,000 to cash account rupees 5,000, being goods purchased from Amar. Here, if the goods were purchased on credit, the creditor's name or the person from whom the goods are purchased will be mentioned. But it is purchased on cash, so there is no mention of Amar in this particular transaction. But in the narration, you have to write that goods are being purchased from Amar. Moving to the next transaction. Purchase goods on credit from Sujit rupees 21,000. Okay. So here there is a credit purchase of goods and it is on credit. So the name of the creditor is also mentioned. Okay. So purchase and Sujit both are personal account. Rule is debit the receiver and credit the giver. So what account is receiving? Purchase account. Purchase account debited rupees 21,000 to Sujit account rupees 21,000. Being goods purchased from Sujit on credit. Why it is mentioned Sujit? Because firstly, the goods are taken in the credit on the basis of credit, and secondly, the name of the creditor is mentioned in the question itself. So we mentioned the name of Sujit. But in the previous transaction, we did not mention the name of Amar because it is the goods were purchased on cash, not on credit. Here the goods are purchased on credit. So both purchase and Sujit are personal account. The rule, according to the rule, the debit the receiver and credit the giver. Moving ahead, purchase goods on credit rupees 2,000. Here there is no mention of the name of the creditor. So we took goods on credit. So creditor's name from where we took the goods on credit. Here there is no mention of the person's name or creditor's name from where we took the goods on credit. So here the transaction will be, so we have creditor's account and also the purchase account, which both are personal accounts, which belong to the category of personal account. So according to the rule, purchase debit the receiver and credit the giver. So purchase account debited to creditor account. Why the creditor account is mentioned over here? Because there is no mention of the person from whom you took the credit. So we will mention the name of the creditor only, or the particular account which is the creditor account. The next is treatment of payment of personal expenses account. It is a totally next subheading. We completed the purchase and sale transaction. It is a completely different subheading. When the payment is made to a person against due to him, the person accounts of the creditor should be debited. Okay. So when the cash is paid from the creditor, means you have owned some money from a person. When you do pay him, means when you completely pay him. So what is mentioned over here? The personal account of the creditor is to be debited. Means if you took from Sujit, means Sujit account is to be debited. However, if the payment is made to a person representing business expenditure, then particular expenditure account, nominal account should be debited. Okay. If there is an expenditure made, particular expenditure or business expenditure made on a particular person, then the particular expenditure account is to be debited. Nominal account means debit all expenses and losses. Moving ahead. Paid rupees 500 to Varun account. Here, Varun account is a personal account and cash account is a real account. So, according to the rule, debit what comes in and credit what goes out, and debit the receiver and credit the giver. You may have taken rupees 500 from Varun. So, you are paying a rupees amount of rupees 500 to Varun. So, entry is Varun account debited according to the transaction. The creditor's personal account is to be debited. Varun's account debited to cash account as cash is going outside the business, being cash paid to Varun. Paid salary rupees 500 to Varun. So again here the business expenditure account is involved. Here the two accounts involved are one is cash and second one is salary, which is business expenditure. Rule is debit what comes in and credit what goes out. Nominal account, debit all expenses and losses, credit all incomes and gains. So here the loss or the expenses salary, the salary account debited to cash account. Previously it was a credit amount to paid to Varun. So we mentioned Varun account debited, but here it is a business expenditure or business expense. So we mentioned the salary amount. So salary account debited rupees 500 to cash account rupees 500 being salary paid. So this is about the two subheadings. One is when you're paying to the creditors either on the personal basis or either on the business expenditure. As secondly, there is a purchase and sale of goods or purchase and sale of assets and investments. So this is about the two particular topics we learned in today's video. We'll have a Google Meet section soon about this transaction and we'll have a discussion on it. Thank you everyone.